Imagine this. It's 8:17 a.m. You're driving to work, coffee in one hand, dreams in the other, and suddenly, boom, a minor accident. No one's hurt, but one question will decide whether this moment is a small inconvenience or a financial nightmare that follows you for years. What kind of car insurance do you have? Most people your age don't think about insurance until after something goes wrong, and by then it's too late. Here's the uncomfortable truth. The wrong insurance choice can quietly destroy your wealth before you even build it. In 2026, with rising car prices, medical costs, and insurance premiums, this decision matters more than ever. So today, we're settling the debate once and for all. Full coverage versus liability insurance. Which one actually makes sense for your life, your money, and your future? And stay till the end, because the final insight might save you tens of thousands of dollars over your lifetime. Pattern interrupt. Quick question. Would you rather pay a little more now or a lot more later? Exactly. Let's begin. Act 2. The conflict, the comparison, tension, and real stakes. Point 1. Liability insurance, the minimum mindset. Liability insurance is the bare minimum required in most US states. It covers damage you cause to others, medical bills for other people. What it doesn't cover: your car, your repairs, your financial stress. For a lot of young drivers, liability feels attractive, it's cheap, it's simple, it feels responsible, but here's the fear nobody talks about. If you total your car tomorrow, liability insurance leaves you completely alone. No backup, no safety net, no second chances. Pattern interrupt. It's like wearing a helmet, but only protecting someone else's head. Now, liability can make sense, but only in very specific situations. And that brings us to the temptation on the other side. Point 2. Full coverage, the safety net. That costs more. Full coverage usually includes liability collision, comprehensive translation. You're protected from accidents, theft, vandalism, weather damage, and your own mistakes. Yes, it's more expensive, but here's the exciting part most people miss. Full coverage buys peace of mind. It protects not just your car, but your future cash flow. In 2026, replacing a car isn't a $5,000 problem anymore. It's a $25,000 to $40,000 decision. Ask yourself, if your car disappeared tonight, could your savings absorb that hit without derailing your goals? Cliffhanger. Because the real question isn't which insurance is cheaper, it's something much deeper, and we're about to get there. Point 3. The wealth lens. How rich think differently about insurance. Here's a mindset shift. Wealthy people don't ask, how do I pay the least? They ask, how do I reduce catastrophic risk? Liability insurance is a short-term savings play. Full coverage is a long-term risk management tool. If you're building credit, growing income, investing, planning freedom, then one uninsured disaster can wipe out years of progress. Pattern interrupt. Funny how we'll protect a $1,200 phone, but gamble with a $30,000 car, right? Now, before you blindly upgrade your policy, there's one critical factor you must consider next. Point 4. When liability actually makes sense. Let's be real. Liability insurance can be the smarter move if your car is old and low value. You have strong emergency savings. You could replace the car without debt. In that case, paying for full coverage may be wasted money. And wasted money is the enemy of wealth. But most 18 to 30-year-olds, they're financing cars, building careers, still stacking their first real savings, which means for them, cliffhanger, choosing liability might feel smart today, but become painfully expensive tomorrow. Point 5. The 2026 reality check. Costs are rising. Here's the urgency. Insurance premiums are rising. Medical costs are rising. Car repair costs are rising. In 2026, mistakes are more expensive than ever. The gap between being insured enough and being insured barely has never been wider. So the question becomes simple. Do you want insurance that just checks a legal box, or insurance that protects your lifestyle trajectory? Act 3. The Resolution Decision. Empowerment CTA. Here's the truth. There's no universal best option, but there's a smarter one based on where you are and where you're going. If you're still building wealth, momentum, and freedom, full coverage is often the safer foundation. If you're financially stable, liquid, and strategic, liability might unlock faster growth. Insurance isn't about fear, it's about control. Control over setbacks, control over risk, control over your future self. And remember, every dollar you protect today is a dollar that can compound tomorrow. Which brings me to this. If you're serious about building real wealth, not just avoiding mistakes, watch the video on your screen next about the power of compounding, because insurance protects your money, but calm